And now let me invite the next speaker, Piotr Filipiak, Business Solution Consultant at Comarch, Poland. Piotr, you're welcome.
Oh, thank you, Elena.
Thank you, welcome.
Okay. Good morning. My name is Piotr Filipiak. I'm a business solutions consultant at Comarch, and I would like to speak a few minutes on the usage of artificial intelligence in cash flow forecasting. And the title of today's presentation is What does the history of transactions say about the future? So first of all, some numbers. McKinsey estimates that AI technologies in the banking industry could potentially deliver up to 1 trillion US dollars of additional value each year. And you must admit that this is quite a number. There are many potential use cases of AI in banks. First of all, fraud detection. So the security. AI algorithms track what is going on in the account, and if there are any outliers, the system reacts immediately without any need to interaction from the bank's employee, for example. Then second, recommendations. I mean smart marketing. So nowadays, we need to agree that mass marketing actions doesn't work anymore because an average client doesn't exist. So everyone deserves a dedicated offer because everyone has different needs. Then we have end-to-end process automation, and I mean automation of literally all processes in the bank, from the front office to the back office. We also have virtual assistants such as chatbots or voice assistants. And scaling contact centers using these chatbots and voice assistants has never been easier before. Moreover, such tools like voice assistants can be used by disabled people, or can be used in new technologies like car banking. And last but not least, we have a cash flow forecasting. So today, I would like to speak on cash flow forecasting. Excuse me, but there are some issues with the clicker. Okay, now it's working. So regarding the cash flow forecasting, I would risk that it is quite undervalued, but there are strong reasons of this situation. First of all, not many banks provide cash flow forecasting for the business clients. And those who do, they do it with unsatisfactory results. Models are ineffective, data are wrong, and by that clients are misled. And in order to change this situation, change this picture, we can use AI, which can significantly improve estimations and by a result, user experience of the customer. So one of the problem is stationarity of time series. It may sound quite complicated, but in fact it's very simple. Let's assume that this month we have a balance of 100 euro, and of course on the customer account. And our model predicts that next month the balance will be 101 euro. What if next month there will be 99 euro instead of 101? We can tell that the model accuracy was 99%, so the error was 1%. But in fact, this is a huge mistake. So actually, our model was totally wrong. With financial data, we need to predict movements, direction of the movements, because the raw data consists of trends. And we need to look far behind this trend. So this is the same data, but instead of real values, we took into the consideration differences. And as you can see now, our mistake seems to be much more serious. So our base forecast was an increase by 1, and actually the data have decreased by 1. So our mistake was 100%. This is quite enough. Another thing is environment, external environment and circumstances. So circumstances are constantly changing, so we need to adapt and the model needs to adapt. This is why with predictive model should be fed with new data as frequently as possible. So it can evolve, it can adjust to the environment and become a better tool. Another important aspect is to perform a lot of cross-validation testing in order to check if the model is accurate or not. And if it's not accurate, we need to change the model or we need to change the parameters. So after this quick statistical introduction, we may think that modeling of time series is quite understandable, in fact. And indeed, it is not a big achievement to model a single time series, but in case of a bank, this is getting more serious. Instead of one customer, we deal with thousands of them. And we deal with thousands of customers at one time. And the data keep growing rapidly and constantly. Each of the customer needs different model, each of the customer has different data, and this model and this data are growing and changing. That's why we need a solution which is based on AI. So the solution is AI-powered automatic forecasting system, and tasks of this solution are to select the right model for the customer based on data, based on historic changes. After that, based on this data, estimate parameters. After estimation of parameters, the system needs to calculate forecasts. And what is the most important, it needs to be presented to the customer in the best possible way in order to increase customer satisfaction and in order to increase the usability of the model. But neural networks have their limitations too. They learn time series by heart, and because of that, they are quite poor in terms of forecasting. So that's why we need to use a combination of statistical algorithms and neural networks. Similar approach is used by the Amazon, and you must admit that Amazon is quite successful on the market of AI. In fact, Amazon is AI challenger. One second. We cannot forget about the financial data because financial data are a subject of many influences such as inflation, global economy, gross domestic period, FX rates that are constantly changing, loans, repayments, schedules, salaries, and so on. There are many, many factors. That's why we need to fill models with all the necessary information based on data gathered from the client, gathered from external systems like ERP, gathered from external information services about the economy. We need to put every information in this model just to clarify it and to make the best possible estimations. And that's why we fill models with the domain knowledge data based on information to increase the accuracy of the model. And speaking of accuracy, we are quite satisfied of the results. While developing the forecast solutions, we have performed a lot of cross-validation testing. So we have checked the models on real historical data, and we have obtained quite satisfactory results. On the graph on the right, you can see one of the estimations based, of course, on real data, and light colors presents our forecasts, while dark colors in the same time presents actual data. So from the graph, we can see that the model is effective in forecasting future and errors are not significant at all. So we are getting to the question, what does the history of transactions say about the future? First of all, our models, which are using AI, without any doubt shows that the history of operations is not a random walk. And if it's not a random walk, it means that it includes patterns and it includes trends. And based on these patterns and trends, we can predict cash flow for the customer. Apart from the cash flow for the customer, we can predict future events. And apart from the events and cash flows, we can predict future trends and future patterns. Of course, the black swan is always an issue, but we cannot predict it. Now let's move to what is most important from the business perspective. What we actually can achieve with AI-supported forecasts. First of all, we give value to the customer, who can effectively predict his financial situation and plan appropriate actions, such as opening a saving account if he have a surplus of liquidity, of taking a loan at appropriate time. Second, upsell, but not a regular upsell, wise upsell, without irritating cold calls. Bank is able to make appropriate offer just in time based on the data provided by AI solution. Third, of course, safety. Availability to monitor the financial situation in terms of any outliers on the customer's account. And if there is any outlier which don't match the pattern, we can automatically block the account or block the card or any other payment instrument without any need to react from the bank's staff. Then the last thing is the customer retention. AI can learn what is the very first symptom of customers leaving the bank. So we don't need to know that. AI will know instead of us. We just need to provide such customer with the retention offer in the right time before he completely leaves the bank. Thank you very much. This presentation was just a teaser of capabilities of cash flow forecasting system. And if you are interested in the topic, I encourage you very much to download the white paper entitled Smart Cash Flow Forecasting. You can find this white paper on our expo area during the conference, or you can just type the title in Google and you will definitely find it. Thank you very much for your attention, and I hope see you during the panel.